Hi all, and welcome to this webinar. Darren Green here, talking today about investing in Perth real estate in the year 2016, today being February the 18th. I'm going to answer these three questions, or try to. Why haven't people been investing in real estate? 2015, seen investors really drop away. Is now the time to start? And where do I start, or where do you start if you want to invest in real estate? So we'll go through those three questions. So firstly, why aren't people investing? And I think the number one thing is fear. Confidence is very low out there at the moment, especially in WA with the mining companies feeling the pinch. Commodity prices are falling, unemployment is rising, and the real estate market had a bad year. 2015 down by 4%. So the official statistics say in Perth, I think where I live, and many of you live in Byford, probably worse than that. So just there's an overall fear out there, and when people are fearful, they won't borrow money to invest, and fair enough. Another reason is lack of equity. Um, it's been a pretty quiet 10 years in the real estate market in Perth. After 2006, when we had obviously that big boom, a once in a lifetime boom, followed by a drop off, and then since then we've had a couple of years. 2012, 13 weren't too bad, but overall, it's been a pretty unproductive 10 years. So people haven't really built up a lot of equity which they can then use to invest if they so choose. I've been seeing quite a few people who want to invest, but just at this point in time, just lack sufficient equity to do so. Number three, government interventions. Now, the last year or so, the government or a few government agencies in APRA and ASIC have been really getting stuck into banks about the amount of investment loans that they've been handing out, especially for what's been going on in Sydney. So they've been putting pressure on the banks and introducing new rules so to make the banks curb their lending habits. And that has forced interest rates up on investment loans. It's also made banks restrict the lender value ratios on their investment loans. And another potential kick in the guts coming is changes to negative gearing that both sides of of the political parties. Sorry, I don't know much about politics. They're both talking about changing the negative gearing, which will be another kick in the guts to Perth. Obviously, some of these things have been introduced to stop the Sydney market, which was going running hot there for a while. And it hasn't really helped us over here, where we've been quite quiet and we're in a downturn of our own. And another reason is, where are we? Rents are falling here in Perth, down by I think roughly 10% overall. So when the property price is falling and the yield is falling, or the rents you're receiving are falling, I mean, why would you invest? Fair enough that people aren't investing into that type of market. But eventually the question must be asked, is now the time? Well, I can't predict the future. You hear a lot of so-called experts giving their views on what the real estate market is going to do over the next 1 to 5 years. I don't know. I really don't. All I can do is look at the past and what has generally happened. And that is that after a downturn, which we are definitely in at the moment, there is a recovery. So we can assume that a recovery will come if history is anything to go by. When that's going to come, like who knows? Will it be this year? Maybe. Will it be 5 years? Maybe. So is now the time? Short answer, I don't know. But you've got to do it eventually, and it's always better to be in my opinion, to be a contrarian and invest when people are fearful. And at the moment, people are fearful. So it may just be the perfect opportunity. We may look back in a few years' time and say, oh, I wish I had done it in 2016. So if you are thinking about it, where do you start? The first thing you really have to do is establish the value of your current property you've got to make sure you do have enough equity there to be able to invest without taking too much risk on. So you've got a little bit to fall back on. You don't want to. I don't think you want to invest if you have to take lender's mortgage insurance. So you want to make sure you've got enough equity there. So valuation is always a good place to start. You've got to work out your borrowing capacity. So that either means talking to your bank or your trusted mortgage broker and sit down and just work out that you can afford it on your income plus the rental income that you will receive. Make sure that it is feasible. Once you've done that, get a pre-approval. I generally suggest you always get a pre-approval in place. It just gives you that peace of mind that when you go out and find that property, you're almost certain that there won't be a problem, and also put you in a stronger bargaining position, especially in these types of markets where buyers are very valuable. And if you can come in and be a strong buyer, you can really blow the opposition out of the water and perhaps even get a better deal. Once you've done that, you've got to do your own research and know your market. So if you're going to buy in a certain suburb, make sure you know the market or that suburb inside out, what the rental market's like. And if you don't want to do that research, make sure you have a trusted advisor there, whether it be a real estate agent or a buyer's agent, who can act on your behalf and give you the best of their knowledge. You've got to ask yourself the question: will you build or buy established? And that's a tough one at the moment. If it had been 18 months ago, I would have said a build. There's generally a little bit of meat once you build. It was a little bit cheaper to get the same thing, and you got some better tax benefits by having a brand new property. But now I'm not so sure. Buying established, there's some good deals out there at the moment, and it almost seems that building is more expensive than buying an established property at the moment. So you really have to compare the two and make sure you're doing the right thing from that regard. And last, which probably should have been first, you've got to take a long-term vision when you're investing in real estate. This isn't a 1 or 2 year investment. Um, that's not investing. I mean, there are people that do buy and flip properties. That's not what I'm talking about here. I'm talking about at least a 10-year plan, even better 20 years, even better than that is 30 years. So you don't want to be doing this if you're approaching retirement and you haven't done enough. I, I, I wouldn't suggest buying real estate at that point in your life. So you've got to have enough time to ride out the bumps and waves. We've seen it in the last 10 years. Um, if you had bought in 2006 at the peak there, you wouldn't have made any money over the last 10 years. So sometimes even 10 years isn't long enough. So the longer you've got left with income earning potential, the better. So I hope that helps. If you have any questions at all, there's my details there. I love dealing with people who are investing or looking to better their lot in life. So very happy no matter what point you're at, whether you're just starting out or whether you've got 5 properties already. I'm happy to sit down and work out a plan for you. So give me a call, and thanks for listening. I hope this has helped you.